Bam! And we're live. It is Monday, 11:30 a.m., November 2nd. It's basically like the start of a new month. We got elections coming up. It's crazy. It's crazy. I'm freaking out. But I'm freaking out with everyone on the stream, so that's good. And I'm excited, and I'm happy, and I have questions, and I hope everyone has questions, because that's the whole point. The whole point of the stream is to figure out what the heck is going on. Today's episode, as with all recent episodes, is sponsored by Change Angel, non-custodial swap exchange for social good. Stop depositing on exchanges. No more deposits, no more withdrawals. Not your keys, not your crypto, all that fun stuff. Today's title, Bitcoin breaks down. Boom, boom, boom. Is that a bullish indicator? I think so. We're going to look at the chart. We're going to look at the Bitcoin chart. We're going to look at the Tesla chart. We're going to look at the Ren chart. And I'll probably talk about Curve at some point, because I just love Curve.finance, because its gains are real. And that's exciting. Let's pop it over to the main screen so I don't forget like I did the other day. Who's in the stream? We got Angelo. What's up, brother? Heirloom. Morning. It's actually 9:30. I wish it was 9:30. It's already 11:30 a.m. here. Nathan in the house. Why do they have to mess with it? That's right. Yeah, I don't know, man. That's just annoying. I don't like daylight savings time. I think that it should be more like physical, like the actual rotation of the Earth. That should be the time. It is the time. So some countries it's going to be you're waking up at like 2 a.m. because the sun's getting up. It's just what it is. But we should have just one time, and time zones are just really annoying, and everyone gets used to where the sun is at a particular time in a particular country. I think that just makes sense. Lewis is in the house. Always a pleasure. Bam! All right, let's take a look at some stuff. Let's look at some headlines real quick. Let's see what loony business is going on. Stocks are rallying. Yay! It makes no sense. All right, so we got ballots, we got elections, we got Supreme Court craziness, we got coronavirus infections, and the Dow is rallying. Yes! It makes perfect sense. No, it doesn't. No, the VIX is down, upper 30s. Anyway, whatever. Not too excited. Not excited. I'm not too nothing. I'm kind of indifferent about the markets. But there's one market I'm not indifferent about. And there's some serious technical indicators going on in this bad boy. So I redrew support this morning. That's the first thing you always do when a trend breaks. You redraw it. So bear in mind, this redraw tells a story. And that's what these charts do. They tell a story. And take a look for a second, guys. Like, those spot the difference between two photos games. What do you see here? What is a couple of things that stand out? And bam, there's two things that are just fire right here. Fire. Like so bullish. One. Let's do it. One. There's a higher low. Higher low. Higher low. Bam, higher lows. And two, hit on the 1 hour 200 EMA. Hit on the 1 hour 200 EMA. It fell through the 1 hour 200 EMA, but it ripped back up through it. So this pretty much held as support. The higher low trend, this basically used it as support, this dip. And it didn't even get to the second green line. So you have the upper green line and the second green line. If you zoom out to the bottom green line, the bottom green line is another resistance. So we are above a major resistance on July 10th, 2019. That was a big wick. And that's what I'm using as this bottom green line here. And man, and if you look at it on the daily, it was just barely a wick. So look at these wicks. Look at this trend. This is higher lows. This is still a symmetrical triangle formation with pretty much 1, 2, 3, 4, 5 hits on resistance and 1, 2, 3, 4 clear hits on support. It's nice when you pull things out. You really get a good picture. And on the daily, check this out. On the weekly, it's just a giant wick. And what's nice is the red wick wicks to the downside and hits off of that lower previous resistance. So this is very much a resistance. Check it out. We'll zoom out. Look at that. That is resistance, and we'll know in a week it'll be resistance flip support. If this wick closes without dipping below this previous resistance. Ooh, now we're talking, boys and girls. Now we're pinched between these two green lines, which is two previous resistances, and one of them is a resistance, flip support. Man, we got data on the short term, the midterm, the long term. Let's look at the 15 real quick. Okay, so we broke through. So that was where we were very bullish, and I was drawing these purple lines, and we were bouncing off the 15. 200 EMA. But we fell through the purple lines. So this is where you have to zoom out. I'm not even looking at the 30 anymore. I could look at the 4-hour. I like the 4-hour chart. We got green guppies. So we have bullish prevailing trend. We got an upward sloping 200 EMA on the 4-hour. We have an upward sloping. We have an upward sloping 200 EMA on the daily. We have an upward sloping 200 EMA on the weekly. Everything about this chart screams bullish. Now, that's what's so awesome about this intro title. Bitcoin broke down. Where are we? We were 13,800s. And we were down 300 points. I mean, it's not a massive breakdown, but it was a breakdown in price, most definitely. But this is such a bullish breakdown. It's so damn bullish. I can't. It's so damn bullish, boys and girls. That's crazy right there. It's crazy. Just saying. Stops in the house, always a pleasure. Barry's in the house, always a pleasure. Angelo, yeah, 1730. Big world, my man. Lewis says, Curve, what do the technical analysis tea leaves tell you? So let's take a look at Curve. I want to take a look at Tesla because they're about to get freaking hammered. Load chart. I keep Curve up. It's one of my larger positions. So Curve, it's below the damn orange line. I was hoping for it to bounce off this orange line. This orange line was the exit from. Was it really the exit? It wasn't really the exit. And maybe it is still. Maybe it is bouncing off this exit from the falling wedge. But I don't really care about the price of CRV. Frankly, I'm exiting my Aave staking position because the price has been beaten up. I'm gonna keep a good portion. What do I have? I got 224. If I keep 25 Aave, that's the moon bag in case Aave takes over the world. Which you guys know how bullish I am, but I don't think it's gonna in the short term pull 10,000 to another 10,000% or however many thousands of percent it rallied since January. So this isn't the time to make gains like that either. This isn't the time to try and or to hope for an asset to go up in price. I mean, as I've told everyone since September 2nd, the 24-hour gainers have decidedly spoken words of risk off. I mean, you got Ocean, but there's big news. So that the narrative, there's a reason why, and Ampleforth is just Ampleforth. It's just non-fixed supply. So Aave did rip 4.9%, but bear in mind the 7-day is what counts. Aave is down 20%. It's one of the worst losers of the last 7 days. I mean, everything's getting hammered on the way down. This is risk off. And what I find interesting about Curve is that no matter if the price of CRV goes down, I don't care. I don't give a crap about the price. What I care about is their daily volume. And what I care about is my proportional ownership of VECRV. So let's look at the locker. So there's a total of 32 million CRV. So what I want to do, my goal is to try my best to hold on to 0.1% of the VECRV supply. 0.1%. And I did the math the other day. If I own 0.1% of the VECRV supply, and they're doing $1 billion a day in transactions, of which they're doing $52 million today, which is obviously, 5% of what I expect, or my speculative daily volume target. But why would $1 billion be a large number in the next couple of years? So if I'm somehow able to hold on to 0.1% of the VECRV supply, that's $1,200 a day in yield. And the yield is derived from transaction fees. So my goal isn't to acquire curve for curve to somehow appreciate in price. I don't right now risk off. I could care less about an asset going up in price, or at least that's not my goal because I don't think you could take. I don't think it's worth the risk. The risk analysis is not there to put in 100 grand to curve thinking it's going to double. So that's not the bet. And that's not the thought process that goes into how I'm analyzing this particular asset. When I'm looking, and even if the curve was ripping to the upside, that's just going to drive up the yield. Because now the APY, your APY based on VE curve holdings, it's denominated in, I guess, I don't know. Point being, in 4 years' time, I get unlocked the CRV. So you got curve. There is curve here. It's a huge amount of CRV that you will unlock once the period expires. But I don't want one-time gains. And this goes back to how I started my YouTube streams a couple months back, better part of this year ago. It's not about one-time gains. If you win one time, that's it. What you want is recurring revenue streams. What you want is yield. What you want is APY. And the more and then you grow that. And you grow yield. And if you could grow yield in many ways. So if I'm getting 5% of my money, and that's denominated in Bitcoin, and I'm going through Celsius, BlockFi, or I'm going through one of these LPs, here's 5%, here's 6% on your Bitcoin. Here's 9% in your Bitcoin, and here's 6% in your Bitcoin. Or you could take out, a 300% over collateralized MakerDAO CDP, and you get 27% on, 30%, which is a little under 10%. But then you got to account for the stability fee in MakerDAO, which this liquidity pool currently does at 4.67%. So that's a more complicated type of strategy, but suffice it to say, yield. You get yield, and once you focus your portfolio on that, it's growing the yield. And how do you grow the yield? There's two ways to grow the yield. You make bets to get more funds to put it into the yield producing position. And now's the time not to do that. The time to do that was in, I don't want to leave the site. Go back. The time to do that was in May, June, July, August. 4 months we had of alt season, DeFi season. It was fire this year. I'm surprised nobody hits home about how crazy the irrational exuberance was. It was straight up 2017, 4 months out of this year. It was 20% day in, day out, ripping to the upside. So now is not that. Now is not that. So you're not getting your gains, or at least I highly encourage minimize risk. You shouldn't be getting the gains off of high risk betting. So you're going to get your gains from working, which is what I do. I get my gains from working and I apply it to positions that are producing yield and contributing to the growth of my recurring revenue streams. Anyway, that was a very long-winded way to say save your money, and this is basically like the 1960s, except banks suck and they're dead. So you can't save your money in a bank anymore. Now you have to be more up to date with the technology that's available, and clearly Bitcoin produces yield. And if you go and you search and the yield offered by Celsius or the other assets and the other liquidity providers and the AMMs, obviously, and Bancor is included in that because you get avoided permanence loss, and that's more sophisticated what they've created Bancor with their insurance and so on and so forth. And then you have AVE and compound lending. And MakerDAO leverage positions if you want to gamble and take WBTC on MakerDAO, over collateralize a position 30% and buy more WBTC. And now you have a leveraged Bitcoin position. So, there's a lot of things that you could do, and it depends on your risk profile. My risk profile is non-existent. It's basically, I am taking no risk with my money, or at least the minimum risk that I could potentially take while attempting to achieve my goals, which is recurring revenue streams. All right, I missed the chat because of my monologues. What's up? Igor says, please advise what you will have time about how the best way to stake utilize BlockNet. BlockNet, you need a service node. Um, Service nodes are in short supply right now. There's not many of them, and they're also quite expensive. A service node, you need 5,000 block. 5,000 block, what is that? Four and change $1,000. So that's my position. A service node. A service node, I think that's a heck of a bet. And frankly, StakeNet as well. StakeNet is there's four major players in atomic swap dexes. It's clearly BlockNet, I think, is overwhelmingly at the forefront. StakeNet is really damn close because they have Lightning Network and rated network integration. But BlockNet is so much more robust, much more broader technological concepts in play with their software stack. So just absolutely incredible, the two of them. And then Komodo's in there. Komodo's in there with their atomic DEX. And then the cred of more recent. BlockNet has had some choice words for Decred's implementation. Just BlockNet really stands out. So bear in mind it is speculative. Nothing's guaranteed. It took a long time for Linux to catch up as compared to Windows and Mac, but Linux has carved out a good position of everything, especially in the corporate data centers. So, well, man, BlockNet is one of my. I've had them for years though. Years and years. Love that BlockNet. That's the name of the game. Stelios in the house. Always a pleasure. Do you believe that Celsius BlockFi is less risky versus smart contract? Now, this is what I'm talking about. Now, my man, now you're talking my language. This is risk analysis. So, I don't know. What am I supposed to say to that, man? That's the toughest question. That's the question we're all asking. Celsius or 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 a curve? Or Uniswap and the smart contracts, and there's plenty of smart contract hacks, and then you could get insurance on the smart contract platforms to some degree, but they're quite limited in availability. So, man, I can't look. I'm stumbling to answer the question. I don't think there is. We have to find what we're comfortable with, and there's a lot of folks that don't appreciate Celsius. Um, I happen to think that they're legitimate and I think they have good intentions. And it's a centralized operation as compared to much more decentralized operations like Curve. But I like Celsius. Uh, um, we can't just dismiss centralized operations because decentralized functionality is the holy grail. If we did that, we'd be dismissing the entire stock market because a company is a centralized operation inherently. So every single business and company in the entire planet is not decentralized. So what does that mean? That means that I don't think we should dismiss Celsius nor BlockFi as quite likely to be incredibly legitimate business ventures that are intent on disrupting the legacy banking system with noble and honorable intentions. So that's what I have to say about that. Is it less risky or more risky than Curve? So Curve is software. It's smart contracts and the other Uniswap and the other liquid balancer. I don't know. You have to make your own choices and find what you're most comfortable with. I currently don't have an LP position with Curve, and I might put an LP position back in and go for 6.5%. Um, but look at this, man. There's $288 million worth of Bitcoin in here, and it's only churning 2.18% of the liquidity. Man, it's underutilized. There's so much potential. There's so much volume potential for the platform. It's absolutely incredible. $54 million a day in volume with 976 million in AUM, assets under management, so to speak. This could easily be 5 billion, $10 billion a day. What a tantalizing notion. But it might not be, and that's the risk analysis. And also the smart contracts, because that would put into jeopardy the integrity and trustworthiness of the entire platform. So there's a lot of risk all over the place. Risk. Airwolf Heirloom says, and anyone attending the BlockNet Virtual Summit today? Probably not. I'm swamped. I work too much, but man, if you can, they're a wonderful team. They're really nice, and Arlen's great. Extremely, extremely smart and successful people, what they've accomplished. Well, literally, the project could not turn into anything, and it's still an incredible accomplishment what has been achieved. And I don't see how it's not going to turn into an incredible project, an even more incredible project. It's such powerful technology. Um, what will happen to Curve of F 2.0 environment? Irrelevant. They won't do anything. It's still is the 4x of the crypto space. And if you ever want to know what's going to happen with Curve, you go over to finance, you go over to the DEX tracker, and you keep an eye on it. But as of right now, Curve is the forex of the crypto space, and it's in a duopoly with Uniswap. And obviously, it's the new month. Damn, what happened on the 26th? And look, Curve outperformed Uniswap. Oh, that was the harvest hack. That was the harvest hack. A lot of volume went in there. So let's drop Uniswap. So Curve is dominant, man. Look at that. Curve and Uniswap are dominant in the space. Look at that, October 5. Oh, goodness. 5 bill. So clearly Uniswap is dominant over Curve, but if you drop Uniswap out, Curve is huge, man. This is huge. That's a big deal. Look at that. Look at that. Beautiful. That's a hell of a chart. Grizzly says, good morning, Noah. What are your thoughts on Decred? It's got it hammered. Everything's got it hammered hard. Risk off everything. If you have a capacity to liquidate or trim positions, you're in Bitcoin right about now. There's just risk on everything, man. I don't trust it. I was around in 2017 and everything got hammered. I remember Digibite at 14 cents and I saw it go down to a half a cent at the beginning of this year, late December last year, 2019. No, do not hold on to it. There's no honor in watching your bag get destroyed 95%. Get out of the position, liquidate it. There's always another opportunity, and you have to wait for the opportunity. So you know when the opportunity is? It's between March and August, May and August, May, June, July, August of 2020. And you got to wait for another period like that. Because when there's a period like that, there's no hope. There's no, my project's going to come back, or I have to wait. Now I have to wait. I have to hold this bag and wait for it to go up in value. No! March and August. It's fire. Absolute fire. You can throw 100 grand into anything and get 20% in 2 days. It was crazy. It was crazy. So please don't watch your bags burn into nothing yet again. Now is risk off. Risk off. I'm risking off. I love Aave. Aave's ridiculous. I'm getting rid of everything but 25 of them. I'm going to throw it into probably mostly Curve. I want 0.1% of the VECRV. That's what I want. I go over here. I go over to the locker. I want 0.1%, which is 32,000. So I got 26, 25 and change. So I need 6, and it's about 30 cents. So I need about 2 grand. That'll get me the 6. And then I probably have to take some Bitcoin and put it provide liquidity, so I get a CRV output. Albeit I don't need to because my VECRV is going to produce an emission, and along with my vesting schedule, I should be able to maintain somewhat of a 0.1% ownership of the VECRV, or at least try to. Stelio says, is it a better time to go into alts now? Hell no, not now. This is the worst time to get into alts. There's absolutely no indication there's a bottom. You want to wait for May 2020. What happened in May? Well, you're seeing everything ripping. You want things that are ripping. You don't want to buy the bottom. Yeah, clearly if you buy the bottom, you're going to maximize your gains, but you don't know if it's the bottom. You only know if it's the bottom in hindsight. After 2 weeks pass or a month passes and it's 20%, 20%, before you know it, the whole market's going 20%. Just look on the Wayback Machine at CoinGecko for March of 2020, May 2020s. April, May, June, July, and August. The 4 months. So bad with months. May, June, July, August. Wayback Machine, CoinGecko, and sort by 24 hours. And that's a market where you're buying. That's a market where you're buying, boys and girls. Not now. I wouldn't buy anything now. Folks, the alt space has been obliterated, 80% down, and no, you don't buy on the. Fine, dollar cost averaging, you get dollar cost average on the way down, and that's a valid strategy. But I'm not buying on the way down because I have no idea when the bottom is. I want to wait for, as I've told you guys, a curve. I want to wait for something like this. This is what I wait for. I want to buy on a rip to the upside above the 200 EMA, a bounce, and then a higher high. So check this out. So let's say that's the 200 EMA. And let's look at the price action. Watch this, guys. Bam, I want a higher high. I'm missing out on 115% gains. You see what I'm talking about? Now, I hope this really expresses what I'm trying to say. I want to wait for this to rip 115% to the upside. And that's when I buy. Because this has shown me there's confluence and a higher likelihood than less that there's more upside price action to come. We have a rip to the upside, a break of resistance, a flip of resistance into support, and then a higher high. 115% to the upside. So I missed out on 115% gains because I didn't want to take the risk. That's the way I think. Is it better? Yeah, I mean, Stelios, you could do whatever you want with a small percent of your portfolio, and that's well stated. But, you know, what's going to give you good returns on a small percent of your portfolio? Warren Buffett says you want to bet big. The only way you're going to make big is to bet big. So, you know, throwing around 1% here to 20 different assets, you're not going to do anything except take on an unsustainable portfolio. How are you going to manage 20 assets? It's too much data, too much charts, too much. It's a hard answer. It's complicated to manage a portfolio optimally, my friend. What do you think of Lend? Lend is fire. Well, it's not Lend anymore. Lend is done. Now it's Aave. AAVE. There is no more Lend asset. If you haven't migrated your Lend assets, you need to migrate from Lend to Aave. You go to app.aave.com, the migration portal, and you swap your Lend for your Aave. Lend is done. Aave is the asset. I am more bullish about Aave as a platform than any bank. It's an absolutely incredible project, and the maturity and evolution of what they've done lately, and the security module and the stake, just everything about Aave I love, except the asset price, of which I'm going to exit a vast majority of my position. I would not buy it. Just me, and I'm speaking me now. Look, Stelios is talking about small percentage of the portfolio. Maybe someone wants to throw around 1, 2, 3, 4, 5%, but that's not me. I want 20% rips to the upside, and I'm not going to get a 20% to rip to the upside in an environment like this. So what I'm going to do is restructure my portfolio towards yield and gains and APY, which is ultimately what you want to do, even if you get a 20% rips to the upside. Need a restructure so you're getting a recurring revenue stream. Because that's the goal, boys and girls. Recurring revenue streams. Heirloom says, fasten your seatbelts and be patient, especially with the elections. Yeah, that's the bottom line. And this is what I care about right now. This is the chart that's going to produce asymmetrical returns. This is fire. Everything is bullish. Confluence in this chart is the most incredible thing. And even if you zoom out, it's bullish. And then, I just can't. Very exciting. Very exciting. We're on the verge of some big change, folks. Politically, financially, economically, global economics. There's big stuff coming in this decade. It's absolutely incredible. Heirloom says, learn to read and understand the data technicals plus the emotional factor. So I get very emotional. I hate fiat. I have an anger and a bias towards it. So that does... if there's a dollar bull, like Brent says or Raul says, dollar is good to hold. But I just hate the dollars. I hate them. That probably puts me in a disadvantage to preserving a bit of wealth because in a dollar bull, you could have bearish price action for the crypto space. Obviously bearish price action for equity. So I didn't even show Tesla. Check this out, guys. You guys got to be whoever's owning Tesla. I would be gone, gone, gone. Do you see what this is? The 200 EMA in the 4-hour support pretty much held. Obviously, is a dip down, support held. We're talking about after its explosive irrational exuberance, explosive. This is absolutely unsustainable, ridiculous, irrational exuberance. We've had a third test of the 200 EMA on the 4-hour to the downside. And look at this candle. And it closed. And it closed, boys and girls. Oh my God. I don't know how much I could scream it loud enough. Oh my God, look at this. It just closed underneath the 200 EMA on the 4-hour. This is an incredibly bearish chart. The only thing that would make this chart more bearish is if we printed a lower low. If we dipped down to here, and then we came up, and then we dipped down below it and came up. Oh, we started printing lower lows and lower highs. But as of right now, look, do you see? Do you see? Here, look. Let me draw. And I got to jump off the stream. So bat off, broke that trend. Broke that to the downside, ladies and gentlemen. I mean, even if you took like a candle body close, and you did something like this, broke that trend to the downside, ladies and gentlemen. I mean, this is bearish. And then you broke through the 200 EMA to the downside and turned support into resistance. Look at the slope on look at the guppies. Look at the guppies on the 4-hour. Now, that is so bearish. And look at the slope then. The guppies basically represent the slope of the 200 EMA. It's pointing down. This is so bearish. This is either in for normal bearish price action or a risk off. And people are going to be like exiting their positions. Doesn't matter how much you love Tesla. I love Tesla more than anything. I think it's a once-in-a-century company, and I can't wait to buy it. And when and why I want to buy it? I want to buy it on the weekly 200 EMA. Right down here, about $125 a share. What was that? Tesla. $125 a share. Now we're talking about a price point. Yeah, it's getting brutalized, Heirloom, that's right. All right, ladies and gentlemen, 12:03 p.m. on a Monday, November 2nd. Good luck on Election Day. Stay safe. Smack those thumbs up buttons. Tell everyone to subscribe, and I'm going to catch you tomorrow. And I'm sure we're going to have some hot data to look over. So you all have a good day now. Peace.